we are pleased to announce the launch of our upcoming new fund offer, the Sundaram Multi-Factor Fund. This fund uses key investing strategies such as value, growth, quality, and momentum, with size as an overlay to deliver a consistent, risk-adjusted returns over the long term. Learn more about this on our podcast.
Today, we are joined by Rohit Seksaria, who's been at the heart of building this fund. Welcome, Rohit. Let's unpack what makes this fund offering different and how it can fit into your portfolio.
Thanks, Parminder. Happy to be here and happy to explain.
Okay, let me get on to the first question. What is factor investing and how does it influence fund investing?
Factor investing is a systematic way of picking stocks based on specific traits that drive the returns, like quality, value, growth, or momentum. Instead of relying on the gut feeling or the human bias, it uses data and rules to create more balanced and objective portfolio.
What are the factors you've picked and why have you picked them?
So we have selected four key factors: quality, value, growth, and momentum, together with an additional overlay of size. These factors are time tested and well researched, and even in our back testing, we have found that they work very well in designing an good objective portfolio. By combining them, we aim to build a resilient portfolio that can handle the ups and downs of the market.
How do you actually go about selecting stocks for each of these four factors? What matrix or signals are you using?
Each of these factors uses specific signals, like quality. Quality, we are using free cash flow together with low leverage. For value, we are using low price to earnings multiple. For growth, we are using companies with high profit growth. And for momentum, we are picking companies which are showing strong price momentum in recent time. Along with that, on size, we are picking high market cap stocks which are pioneers of the industry and which are capable of withstanding shocks. We are using these factors on the top 250 companies and picking the top companies out of that which fits these traits.
And if a stock qualifies under multiple factors, say both quality and momentum, how do you handle its weight in that portfolio?
That's a great question. So if a stock ranks high in multiple factors, its weight for individual factors will get combined. As such, it will have a slightly higher overall weight. However, most stocks' weight will be limited to 3%, barring few stocks with highest market cap.
What are the advantages of a factor based approach over a traditional active style of investing?
A traditional investing depends more on a fund manager's judgment, while factor investing, on the other hand, is much more rule based and data driven, so it avoids emotional biases. As a result, a factor based approach delivers a much more consistent, transparent, and well diversified performance over different market conditions.
Tell us a little more about your model portfolio and how it has performed.
Our model portfolio consists of top 25 stocks for each factor and it's rebalanced quarterly. Over time, it has shown a very strong risk adjusted returns, outperforming the broader market index and also outperforming the single factor strategies while maintaining much lower volatility.
What is the rebalancing methodology and how often is it done?
We rebalance the portfolio quarterly. That's primarily because most of the fundamental data needed for the factor investing comes once a quarter from the companies, and that's why we are rebalancing it quarterly. So we are re-ranking the stocks on within each factor, and we readjust the portfolio to reflect the latest data.
There are many multi-factor funds in the market. How is your offering differentiated?
Our fund stands out for its diversification and its rules-based approach and dynamic sector rotation. This helps us to capture opportunities better and manage risks across market cycles.
How will sector allocation for this fund be vis-a-vis multi-cap or flexi-cap funds?
That's actually a great advantage of a factor based investing because, unlike traditional funds, this fund won't have a fixed sector weights. The sector allocation will be very dynamic based on the signals of individual factors. Actually, this will allow fund to rotate from one sector dynamically to another depending on the market trends at that point in time.
Over the last few months of volatility, how has the model portfolio performed?
It has outperformed the benchmarks during the recent volatile periods. This validates our approach of combining multiple factors in right proportion for more stability.
From an investor's point of view, what is the ideal time horizon and recommended portfolio allocation?
This is a fund for long term investors, so it's a long term strategy. We recommend a minimum holding period of 3 to 5 years, and this fund can easily be 25% allocation within the overall equity basket of an investor because of its very different approach and a consistent risk adjusted returns which we expect here.
Thanks so much, Rohit, for walking us through the fun and the thinking behind it. For listeners looking for a more systematic, long term way to invest in equities, this fund offers something truly differentiated. As always, speak to your advisor before making any investment decisions. Until next time, stay informed and invest wisely.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.